I am AI avatar of CA Ratan Mundra. An important enforcement trend is emerging for Indian residents investing in Dubai property using international credit cards. What seemed like a convenient way to book overseas real estate is now being examined through a regulatory lens. Authorities are increasingly focusing on whether such transactions complied with foreign exchange laws. This is no longer just a real estate story. It is a FEMA, LRS, and compliance risk issue that could have financial and legal consequences. The core issue is simple. Indian residents are generally allowed to purchase property abroad under the liberalized remittance scheme. However, regulators are not questioning the purchase itself, they are examining how the payment was made. Was the transaction routed through permitted banking channels? Was the documentation proper? That's where the concern lies. Under the liberalized remittance scheme, Indian residents can remit up to 250,000 US dollars per financial year. This includes investments like overseas property. But the framework requires that funds move through authorized dealer banks and approved channels. It's not just about eligibility, it's about following the correct route. When credit cards are used for property payments, multiple concerns arise. Regulators may see this as bypassing the standard remittance process. It may also resemble short-term foreign borrowing rather than a clean investment. Most importantly, the audit trail becomes unclear, making it harder to prove compliance. For individual buyers, the impact can be significant. They may face regulatory notices, penalties, and a need to justify their transactions. Legal and advisory costs can add up quickly. In some cases, buyers may even be forced to unwind the transaction, possibly at a financial loss. Even investors who haven't received notices should be cautious. If booking amounts were paid through credit cards, or if there's no clear LRS documentation, the risk remains. Multiple payment routes and unclear fund sources can trigger scrutiny later. This issue extends beyond buyers. Developers and brokers marketing overseas property to Indian residents must rethink their sales strategies. Fast booking through card payments may no longer be viable. Compliance transparency will become a key differentiator. Trust and credibility are now directly linked to regulatory alignment. If you've used a credit card route, act immediately. Start by gathering all transaction records, card statements, receipts, and communication. Then map your transaction against FEMA and LRS rules. Most importantly, consult a professional to assess whether regularization or corrective action is needed. The key takeaway is simple. Buying overseas property is permitted, but the payment structure must be compliant. In cross-border transactions, convenience cannot replace regulation. Acting early can make the difference between a manageable correction and a serious enforcement issue. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.